Mahesh Patil is with us, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good to have you with us here. Good morning. Thanks for your time. Uh, you know, on Friday, sort of, I looked at earnings which had come through till, the day before until Thursday, and earnings momentum seemed like it was slowing down quite a bit. Now we'll have to do a fresh exercise because so much has happened over the last 3 days. But what is your own sense across your research team, etc.? What are they telling you? How is the earnings season panning out so far?
Yeah, good morning, Prashant. So you're right. I think this quarter, I remember the previous quarter, we have seen the earnings momentum has slowed down. I think what has happened is that unlike in the past couple of years, 2-3 years, where we've seen that the bottom line growth was running faster than the top line growth because of margin improvement and some of the efficiency gains which were there. I think that has now kind of peaked out in a sense. So if you look at the top line growth is now tracking closely to your nominal GDP growth, right? And with the margin improvement behind us, the bulk of the gains because of the lower commodity prices what we had a couple of years back, we see now the earnings growth is now probably tracking closer to the top line growth. And in the top line also, there has been some slowdown. What we have seen in a few sectors in the consumer space, we've seen the numbers have been slightly lower. So all in all, I would say that clearly the growth momentum is now on the earnings front is looking at somewhere in the low teens, right, compared to the high teens number what we had seen in the last year. And that is pretty much likely to be the trend over there. And within those numbers, if you look at the largest sector like banking and financials, okay, there also the growth, the larger gains of last year where we saw the margin NIM improvement and the big benefit coming in from the credit cost. So that those are kind of a normalizing now, right? So that is one sector, okay, which is clearly seeing slower growth than what it was in the last fiscal year. Apart from that, I think IT, if you look at it, IT numbers broadly, I think, in line with expectations over there. In fact, IT is a sector which looks to have bottomed out, right? The commentary there suggests that you should see improvement in terms of growth going forward, though at a kind of a moderate pace. And then sectors like, for example, consumer staples, again, expected to be a weak quarter, okay, in terms of the top line growth. And that's what it is reflecting. Sectors like pharma and this thing are showing good numbers. Okay, so that's where we've seen some upgrades. The power sector, again, a good set of numbers over there. So I would say on balance, it's been a kind of a mixed numbers, but clearly the growth momentum is going on, which is on expected lines.
Mahesh, hi, good morning and thanks for joining in. I want to ask you a little bit about one of the big story this week, which is the Ola Electric IPO that opens on Friday. Now, this is the first and one of the largest electric two-wheeler manufacturer in India that will be now listed on the exchanges. But this is a space that is, it's growing, but still companies like Ola are sitting on steep losses. So what are your thoughts on this electric two-wheeler space? Because we have listed players like TVS Motor and Bajaj Auto, which have done very well. Are you optimistic here or would you start to get a bit cautious?
Yeah, so I think in any sector where there is a disruption which is there and the competitive landscape is kind of getting relayed over there in that sense, and that's what's happening in the electric two-wheeler space. So in that space, at that time, we would want to really evaluate and see, okay, which are the companies, okay, which will emerge winners in that space based on either the product in terms of cost competitiveness or the distribution side. I would say that jury there is still out over there in that sense. We're still not sure. I think the competition is also trying to gear up in terms of their new product portfolio. A couple of other players like Honda is still not there in the market. And it's going to be fiercely competitive than what it was, okay, in the ICE space where there were only 3 players who were dominating in that sense. So I think, and also because of the pricing over there, right? The costs, okay, where you will see the cost curve come down, especially on the battery front. But still, I think the costs are on the higher side, and the flame subsidy which is there, which is kind of supporting. But we don't know how long that will continue and what will be the quantum of that. So in this backdrop, I think we are slightly watching the space, not trying to jump and trying to pull out and say that these are the companies who will be the winners over here. We will still watch in terms of how this competitive landscape develops over here, and then try to take a call. And we have to be very clear that in next, at least not immediately, but in the next 2-3 years, the profitability for EV players, whether we see that at a reasonable level for us to really be positive on that space. But I think the existing players, I think with their strong balance sheets and cash flow, I think will be in a better position to be able to ride this kind of a place where the intensity is going to be slightly heightened.
Okay, so that is in the auto space. The other space I wanted your thoughts about was banking, because we've had a mixed bag of numbers actually, but ICICI Bank has been pretty good. Overall, how are you feeling about banks? Would you raise your allocation to the banks after what you've seen in this quarter's earnings?
The banks have underperformed. Okay, again, while the numbers have been fairly fine, I think it's more to do also because of the regulatory reasons. We have seen a couple of regulations coming in the last 6 months, which have kind of hurt in terms of the bank's ability to grow, I think, and also to some extent on the margin, the recent the LCR regulations, okay, which stipulates slightly tighter norms over there, which will also have some impact on the net interest margin. So I think overall in this space, clearly we are seeing the one challenge was about the deposit growth, I think, which continues to be there. We've seen some of the banks increase the deposit prices recently. But I think concurrent to that, I think you'll see the credit growth also probably lower than what we were expecting earlier in this fiscal year. So I think that's probably weighing down on the banks. But I think a lot of the negatives are pricing. I think the regulatory overreach, what we have seen in the last few months, I think that should be now behind us. So I think from here, from a valuation perspective, and also in terms of a kind of a moderate growth, I think banks, after the recent underperformance, I think looks fairly okay to us. I mean, we're not overtly positive, but again, not too negative. I think kind of a neutral weight for us on the banking sector.
Okay. All right, Mahesh, we will let you go on that note. Thanks a lot for joining in and speaking to CNBC TV18. But just before we let you go, Mahesh, a quick word on the market as well, right? Just before we let you go, do you think that given we have a lot of big events that are out of the way, can we build on to these gains that we're seeing in the market?
So the markets have actually digested a lot of negative news, right? In the last few months, the election results, the budget also in a way was a slight disappointment in terms of the tax, okay, which was there. And despite that, we've seen the markets kind of bounce back. And also the earnings growth, as I said, momentum slowing down. So I think we are getting into a phase where a lot of, I think from a technical perspective, I would say that we're getting into a phase where the market is kind of getting into the phase where kind of a melt-off phase where it's more driven by liquidity and sentiment, which can take it probably still higher from here. But from a fundamental perspective, I would say that markets are kind of now entering in a zone where one needs to be a bit cautious. Nothing negative from a medium long-term perspective. I think underlying fundamentals are good, but one should be fairly cautious. And while the Nifty itself might do better, but the broader breadth of the market is where I would be slightly worried and would want to pare down risk over there. And that would be a prudent thing to do in this kind of a market. But I think stay invested for long-term investors. I think nothing to worry about. I think the long-term outlook remains stable. And the budget also gives macro stability in that sense. So I think, it can technically, I think with the kind of liquidity, it might still move up, but one would want to take some gains in stocks which have rallied too much and gone ahead of fundamentals at this point in time.
Okay, all right, Mahesh, appreciate you joining in. Thanks a lot for giving us a view on the markets. We look forward to chatting up with you soon and wishing you a good day ahead.